Martin from Secrets, the channel for learning about trading and investing. Welcome to Markets Tomorrow, the daily stock market analysis show, where we look at what happened in the market during the day and plan for a better trade for the next day. And this is analysis for January 5th, Thursday, first weekly expiry of 2023. And we had the bears that attacked and shook up. Just one day before the first weekly expiry. Let's see what's impact. Will we survive or not? So this is the weekly charts of Nifty. Just for a quick look, will not be analyzing this much. We can understand that it had a breakout and it reversed, retraced completely and then bounced up. And this week that bounce is not sustaining. That's the problem. Same Banknifty rounding pattern, ascending wedge or whatever. Some kind of resistance or there, breakout happened, all-time highs hit, and then retreats completely and then bounced up, and then it cannot sustain that. That's where we are. Let's get into the daily analysis, which we are interested. Look at the candles, wide range bearish. That's nearly 1%. Banknifty, wide range bearish, nearly 1%. We had a bearish view yesterday, remember that? Not just yesterday, for the last several days it has been bearish view. And you can clearly see that this is a resistance zone from the trend line, or a descending wedge can clearly be seen on the Banknifty as well as, and this is exactly where the reversal has happened. And suddenly things have turned in favor of the bears all of a sudden, right? And 18,000 was tested multiple times today, and the question is, will it hold that tomorrow? That's a big question for us. So clear bearish day. Look at the Bollinger Bands. Expansion started on the downside from the contraction. So Nifty has already turned bearish, while Banknifty is holding on the sideways momentum, right? But both are having a bearish bias because it's less than the median of the Bollinger Band. So bearish bias there. Changeable already bounces on the weekly. You can see that that's what is happening on a weekly basis, right? That bounce is happening, but last week it happened. So if it has to get a confirmation, it has to move above the high of 18,265. Really, if a close happens above it, you can confirm that the bounce is for real. Otherwise, it was just a red cat bounce. Same with Banknifty also. But Banknifty, at least in the medium term, also it shows much more strength from the than. But today Banknifty was hit hard. It gave up the 43,000, which was trying to hold for a lot of time. So there is a higher high pattern. We talked about that on both indices, especially in the Nifty. There is a absolutely sorry. Price action, lower low and lower high, lower high, lower low, lower high, lower low. So only if this 18,475 is cleared, and then can we say that that pattern is breached. Until then, we will keep on making lower. So there is every chance that it can breach the 17,774 something, that level was the previous swing low, and that can be reached, and another new lower low can be made. It's possible. So that's the negative part of it. And all the moving average supplements are all gone. Bearish bias, exponential moving average of the price is close below the daily moving average, which is trouble. See, it was resisting multiple times. How many times you see? 1, 2, 3, 3 days it resisted below the 20 moving average. That itself indication that it's resistance, pure resistance out there. So, and finally it gave up. But Banknifty is really recently, it was holding about 200 since all these days, last 3 days when Nifty was struggling, but finally managed to close below that and then ended up with a bearish bias along with the Nifty. So that's what exactly happened today. It's a summary. Intraday price action was was right from the beginning. It was downtrending for sure, but the kind of attempts that it made to come back at around 12 p.m. that made it a little volatile because bulls were hoping that it could be another V-shaped recovery day, and then finally it ended up close. That didn't happen. The sell-off came in after 2 p.m. and all the gains of that 12 p.m. move failed. That's the intraday price action that happened. Same in Banknifty also, right? So that's a failed attempt of reversal. Yesterday was a successful attempt of reversal. So that's what happened yesterday. Levels remain 18,262 and 18,442, 18,400. That levels are all resistance or upside. Fibonacci retracement plus previous swing highs. 18,000 would be a good support now. It'll look out. It's a rounding number. Fibonacci 38 retracement also comes nearby that somewhere. Right? 959 also is just below the 18,000. That also is previous swing support, and then 17,800 would be after that, right? And previous swing low will be 17,700. So that kind of move may not happen in one day, but eventually it may happen. It may be retested. The previous swing low may be retested given the fact that reversal symptoms are there. If the price goes below the today's low, then you can definitely look forward to 17,800 for sure. In the coming days, 1 or 2 days, it may happen. So, yeah, 7,600 is also have a Fibonacci support of 61. So breach of that would be a concern. So 500 breach would be a confirm. So 100, 600, that zones are critical. That just for the next week to decide. And by the time the people who are gone for vacation will be coming back, and then make volumes will come in and all that. Let's hope for that, right? So the volatility bands we already discussed. Momentum is it's bearish. It's not bearish. It's sideways basically. Sorry. So sideways, but with the momentum that is, we are talking about RSI momentum, momentum that is falling. Yesterday it was rising, but sideways. So always sideways. Now, trend indicator, we use the ADX. ADX is showing negative bearish indications on both the indices. Now Banknifty also has joined that. At least the trend did not closed over. No, it was still showing bullishness still yesterday, but now both have bearish in the trend perspective, sideways in the momentum perspective. Both are in sync. Both the indices, I mean. VIX has spiked up suddenly. We had a 15% spike up the previous week. Then some call-off happened, but call-offs are less. It is flat kind of call-offs. It never went below the 14 or 14.5 in fact, but look at the spike. The call-off is 2% and the spike is 6%, 15%. That's the kind of spikes that are happening. So VIX was the index for the volatility itself was volatile today. It was kind of 9% up and then 6% down, and then again another. It was very, very, very choppy from the VIX point of view. The VIX itself was very, very, very choppy. So option sellers and intraday option sellers would have had great trouble for sure. Now, so that is about the VIX. So we'll be careful. It is spiked above the 15, so it's no longer the lower regime. Right? It is climbed to the almost the edge of the lower regime, you can say. So that's it. It's unable to sustain VIX below 13 or 14 that level. So it's spiking. So because there are uncertainties in the market, recession fears are there, as these markets are there, global COVID worries, and all these things is what the VIX cannot cool off other than what we thought may happen. Right? It's not happening. So futures option industry showing short build up definitely. Yesterday it was long build up both the indices. Today short build up. Now the levels for tomorrow, what it indicates is 18,000, and where the highest put writing is 18,200, highest call writing on the Nifty. 43,000 and 43,500 is the highest put and call writing. That remains the same as yesterday. This is for the January 15th. Tomorrow Thursday weekly expiry. First weekly expiry for the 2022. Put call ratio is also far away from the bullishness. It's closer to the bearishness actually. Put call ratio is closer to bearishness, 0.55 for Hedging, Nifty and Banknifty respectively. So trouble there. Options OI narrow range, very narrow range, but all eyes will be on 18,000 and 43,000, the two levels on Nifty and Banknifty. If that's breached, then it's unpredictable, right? But the option writers may try to protect that levels. Tomorrow, volatility, expiry day volatility could be expected as usual. Let's look at the different industrial sectors. All sectors closed flat across. Real estate made bigger falls of 2%, nearly 2%, and IT and auto made 1% kind of falls. And FMCG was kind of 0.5% falls, and pharma was flat, but all red. The bearishness is more evident in the short term from the momentum perspective. On the FMCG and all the sectors are having a sideways one in the short term. ABB, HDFC, Twins, Real, Reliance, Infi, all of them fell 1 to 2%. Big falls, near to 2% falls. What is all heavyweights? ICICI Bank, Kotak Bank close less than 1%. But so HDFC and Infi are big Reliance. These are giants of the index, and that's what brought the index. Big selling happened from the Fyers for sure. 2,620. You can see that down below, right? So Infi and Kodak Bank in the short term, the momentum bearishness is there in both Infi and Kodak Bank, but others are still maintaining the sideways momentum which it had gained previous week. So institutional selling is trouble. 2,620. It's a eighth or ninth day. It's a ninth day of affairs continuously selling, and the second day of the highest selling. Last Friday it sold big 2,000 crores or something. Now again 2,000 crores. Wow, selling is happening by FI. This is worrying, and domestic institutions are not able to catch up with the amount of selling by the FI. That's a market fall. So, but FIs have been continuously buying December, we know that. So, institutional participation, especially from the FIs, is in trouble, and it keeps worrying us. How long can the retail money or the mutual fund money how long can it hold the market? Crude oil, some relief there. It's fallen back to 75. Not sure of the reasons behind that because of but a 3% downfall is seen on the charts, and it's in a trend line channel, so it's good for us, but our economy. But there may be some fundamental reason why it has fallen down, which we need to understand in the coming days. Total is cooled up, but not much. 104 level is maintained. It's in sideways momentum, falling. But INR is USD INR currency pair is rising. Rupee is weakening. Basically, 82.80, 83 nearby levels is where it's hovering around, and there is absolutely no intention of cooling it off. That's become the new normal, like 75 kind of levels has become the 82, 83 kind of levels now. So that's a worry. But crude off would be a good thing to happen. And gold is also rising up. So 1% move nearby has happened now today. It has been moving up. It has climbed the resistance, and from there it is trying to climb the next resistance upside. So momentum is bullish. So gold normally rises up when the market is not doing good, right? So that's maybe what is, or probably there is a big downfall that may be awaiting. That's the reason why the hedging instrument gold is spiking up. So that's something that we need to think about, seriously. Why is the gold suddenly rising back? And in fact, the gold bees, Nippon gold bees, is almost near to the August 2020 levels, 2 years back high. It is going to that level. So big spikes happening in the gold. So we have to keep a close watch on that as to why, and also use this as an additional instrument to hedge against market fall. And SGX in Singapore exchange is not flat, and using as green as of now, but yeah, we'll have to see both of them on the pre-market tomorrow morning, our pre-market, as to how they did well in the did bad or well in the night while we are sleeping, right? So only then you'll get a picture. No current moves are not really indicative, but US indices, we know it is falling down. It is in a descending wedge on a weekly charts if you see, and it has been falling towards the next support zones, and then so if that fall is sharp, then we have to, if it is slowly sliding, it may not impact, right? But there's an event also coming on tomorrow, Jan 4th, 2023. Fed meetings minutes will come, so more cues may create panic or may make it dovish. You never know how the market will respond tomorrow. So Friday our markets it may reflect. Your job trade also is coming tomorrow, so Friday will be volatile, either upside or downside. You have to keep close watch if big moves have happened before you trade the next day. Right. Two stock picks: Naveen Florin short, Dublin Food short. Sir, pure short-term play and not long-term. Right. Just swing trades is we are talking about. Reasoning: we are having. Let's look at weekly, but trade would be taken on daily. Right. There is a head and shoulder pattern that is emerging. This neckline, if it is breached, it can be big moves. Also, there is a trend line there, so that's slow. So, and the momentum and trend is bearish basically, and pattern that is emerging out is also kind of bearish. Otherwise, Julian good is full. You have to keep tight stop losses. These are very good stocks in the consumer sector. I think they own brands like Domino's and all, which no matter what happens, always will be profitable kind of. So I'll be cautious on the stop losses, and these are only swing trades. The pattern changes immediately, you have to come out. Right now, it's clearly bearish momentum and clearish trend rising up, with price patterns also matching with that. So swing trades below the candle low on the daily lower time frames with tight stops could give strong profits. Now the peak would be Naveen Foreign. That is also a very good uh, stock. This might have been overvalued or ran up too much. Now they are correcting themselves. That's maybe what is happening. So otherwise these stocks are not very good. So keep a note of these levels and then play. Look for too much of fall to happen. As long as the momentum indicators are below the bearishness, you can play. Trend is also bearish and rising up. Price pattern is a trend line channel that is getting broken, right? So if that sustains, you can go for short swing trades of 1 or 2 days within this level up to 34 kind of level. So Jubilant Food and Naveen Flooring are two stock picks in the short side for tomorrow. Having looked at all of those things, let's wrap up. Market got hit today by the bears, and it's showing symptoms of a reversal. Suddenly, this changed bearish, and the bounce that happened previous week now is in question whether they are going to ever make it above that high of that previous week's handle or not. It's a big question. If that is not happening, then probably we are heading towards it. For the more pullback and make another swing low, we may be heading towards that. So, look at the price less than the moving average 20. In fact, even 20 also broken. Banknifty also. Bollinger Bands expanding downside, sideways momentum, trended bearish on both indices. Rupee weak and US market bearish. My view remains to be bearish to neutral. Neutral because tomorrow is an expiry day and fight may be happening in optional writers may try to maintain that levels, but overall bearish view is what I have for the next day. Right, it's on the medium term 17,800 and 18,500. Upside and low side and upside is what you have to look for. Nifty and 41,500 and 43,500 on the medium term. Upside and low side. But for tomorrow, 18K and 43,000 is what close watch has to be. So always schedule positions when you're playing because even exchange can go down anytime. We've seen that once, right? So all of these things out of our hand will be there. So backup plans for that. Always hedge your position no matter, so that even if worst thing happens, you know what exactly will be still in the game. You don't lose a full capital. So that's a play you have to do. And for investing, every time it falls big time, that's a time to purchase in a SIP model. All right. And protect your capital with rental income with option strategies, videos of which is there in the playlist. Okay. So I hope this helped you to frame some better plan for the next trading day. Try to understand the markets better. If that has helped you in some way, consider the like button and share the feedback, comment everything, and share it with your friends and subscribe if you're not subscribed. Because we appreciate and we know this is the only way we can get motivated to do this every time. So please subscribe and share it to your friends. We need more subscriptions. Thanks for watching. Happy trading, happy learning, happy investing. Bye bye.